In 2021, green hydrogen was going to be the next trillion-dollar industry. 5 years later, Plug Power is down 96%. Ballard, 90. NEOM, 94. Nikola filed Chapter 11 last February. But Bloom Energy is up 1,000% in 12 months. Air Products is finishing an $8 billion project in Saudi Arabia. Same molecule. 3 completely different outcomes. This is what actually happened. I'm Big Z. In this episode, we'll answer 3 questions. First, why did every pure-play hydrogen stock collapse 90% or more while the industry attracted $200 billion of announced capex? Second, why did Bloom Energy go up 10 times while its peers went bankrupt? And third, who is actually still investable in hydrogen? Here's the setup. In 2020 and 2021, the green hydrogen story was perfect. Make hydrogen by splitting water with renewable electricity. Replace natural gas in industry. Decarbonize steel, ammonia, refining, and shipping. By 2030, the IEA forecast 49 million tons of low-emissions hydrogen. Investors went all in. Plug Power hit $75 in January 2021, a $60 billion market cap on $600 million of revenue. Ballard, Bloom, NEOM, FuelCell Energy, every name with hydrogen in the pitch deck went vertical. The IRA in 2022 added a 45V production tax credit worth up to $3 per kilogram of clean hydrogen. The story looked unstoppable. It wasn't. Let me give you the numbers from this morning. Plug Power peaked $75 in January 2021, today under $3. Down 96%. They had to flag a reverse stock split risk in January and burned $800 million of cash last year. Ballard Power peaked $42, today under $4. Down 90%. Nel ASA in Norway, the world's largest electrolyzer maker by some measures, peaked 33 Norwegian kroner, today around 2. Down 94%. Statkraft cancelled a 40-megawatt order last March. FuelCell Energy did a reverse split in October 2024. Stock down 95%. And Nikola, the hydrogen truck pioneer, filed Chapter 11 on February 19, 2025. Liquidating trust effective last December. Down 99.9%. This was a near-extinction event. So what actually broke? 3 things at once. First, cost. Green hydrogen still costs $5 to $7 per kilogram to make. Gray hydrogen, made from natural gas, costs $1 to $2. Nobody pays a $4 premium for the same molecule unless they're forced to. Second, demand. The IEA's 2025 review is brutal. Of the 37 million tons of low-emissions hydrogen announced for 2030, only 4.2 have reached final investment decision. That's 9%. And of that announced volume, less than 5% has firm offtake agreements. Third, the policy backstop. The 45V tax credit, the entire economic case for green hydrogen, was terminated in Trump's One Big Beautiful Bill in May 2025. Gone. Without policy, without buyers, at 3 times the cost, there is no business. And yet Air Products is up. Linde is up. Air Liquide is up. The boring industrial gas oligopoly that has sold oxygen, nitrogen, argon, and yes, hydrogen, for over 100 years. Linde just reported $34 billion in fiscal 2025 revenue at $14 EPS. Air Products did $3.1 billion in Q1 alone, growing earnings 10%. Air Liquide has committed at least €8 billion to hydrogen by 2035. Why are they winning? Because they sell hydrogen on 20-year take-or-pay contracts to actual customers, refineries, ammonia plants, NASA. Their projects are blue hydrogen natural gas with carbon capture, which still qualifies for the 45Q credit that Trump's bill kept. They never depended on the 45V subsidy. They never depended on the visionary buyer. They had real customers and real cash flow before the hype, and they have them after. The flagship example is Air Products' NEOM project in Saudi Arabia. $8.4 billion, 90% complete as of February. 600 tons per day of green hydrogen, fed into a 1.2 million ton per year ammonia plant. Every kilogram pre-sold to Air Products itself, with a 30-year offtake. Original commercial production date, end of 2026. Latest update, mid-2027. They slipped, but they're still building. By comparison, BP cancelled its 1.5 gigawatt Duqm green hydrogen project in Oman last December. Shell halted Okra in Norway. Origin Energy exited Australian hydrogen entirely. Equinor pulled multiple European megaprojects. Among the dozen biggest green hydrogen project commitments of 2022, only Air Products and NEOM is going to ship. That's the gap between balance sheet capital and venture-style capital. Now, the outlier. Bloom Energy, ticker B. Bloom should have been a casualty. They make solid oxide fuel cells. They were the AI hype's favorite green hydrogen play in 2021. Then the green hydrogen story died. But Bloom's fuel cells run on natural gas today. And in 2024, the AI data center power crisis hit. Bloom's pitch became, forget hydrogen for a minute, we can drop a fuel cell on your data center site in 12 months, with no grid interconnection, and convert to hydrogen later if you want. The orders exploded. Brookfield announced a $5 billion AI infrastructure partnership in March. Oracle contracted 1.2 gigawatts. AEP signed a 1 gigawatt, $2.65 billion deal for Wyoming. Equinix is at 19 sites. Total backlog, about $20 billion. The stock is up 1,000% in 12 months. Bloom didn't win at hydrogen. Bloom won by pivoting to natural gas distributed power for AI. The hydrogen optionality is a free call. So here are the 12 names you need to know. The 3 industrial gas winners, Air Products, Linde, Air Liquide. The pure play wreckage, Plug Power down 96, Ballard 90, NEL 94, FuelCell 95, Nikola in liquidation. The Bloom Energy outlier pivoted to AI data centers, $20 billion backlog. The electrolyzer makers, also in retreat, Cummins took a $458 million charge in 2025 and announced it is stopping new commercial electrolyzer activity. ThyssenKrupp Nucera in Germany guided fiscal 2026 revenue down 30%. And the real demand pivot companies actually buying hydrogen today. CF Industries wrote off its green hydrogen project and joined a Blue Point joint venture with JERA and Mitsui, 1.4 million tons per year of blue ammonia, into Asia. The customers exist. They just want blue, not green. Here's what nobody tells you about electrolyzer makers. The market was supposed to grow from $2 billion in 2025 to $14 billion by 2031. The reality, in 2025, the industry cancelled 4.9 million tons of announced capacity, and added only 1 million. Net negative year. Cummins is exiting. Nucera is guiding down 30%. NEL's Q2 revenue fell 48%. Meanwhile, Chinese alkaline electrolyzer makers Linde, Sungrow, Sany are taking the low-cost share that's left. The high-pressure Western PM business is being squeezed from above by zero demand and from below by Chinese price. Same playbook as solar. Same outcome coming. So where does this go? Demand is real, but it lives in places nobody pitched in 2021. Refineries, they buy 10 million tons of hydrogen a year already. They want blue, not green. Ammonia, for fertilizer and clean fuel into Japan and Korea. Real money. CF Industries' Blue Point JV with JERA and Mitsui is a 1.4 million ton clean ammonia plant in Louisiana, FID in 2025, online in 2029. Steel, Stigra, the former H2 Green Steel project in Sweden, is coming online this year. Real volume. In my view, the entire investable hydrogen story has shifted from green to blue, from greenfield to brownfield, from pure play to integrated industrial. The visionaries told you to buy Plug Power. The actual answer is Linde, with a take-or-pay contract. So where does this go in the next 12 to 24 months? 3 signals to watch. First, Air Products NEOM commercial start. Currently slipped to mid-2027. If they hit the date, the playbook works in Air Products 15% growth holds. If it slips into 2028, the entire announced green hydrogen pipeline gets re-rated negative. Second, Bloom Energy quarterly orders. They guided to $3 to $3.3 billion in 2026 revenue, 50% growth. If hyperscaler orders stay net positive, the AI fuel cell story extends to 2028. If Brookfield or Oracle pause, the multiple compresses fast. Third, clean ammonia FIDs. Watch CF Industries' Blue Point construction start in 2026, and watch for follow-on JVs from JERA, Mitsui, and POSCO. If 1 or 2 more reach FID, blue hydrogen via ammonia becomes the dominant clean H2 demand vector. Catalysts upside to Trump administration carve-out for clean ammonia, Asia demand acceleration, copper-priced electricity in 2027 making green H2 economic again. Catalysts downside, natural gas prices spiking and breaking blue economics, China alkaline electrolyzers undercutting Western players entirely. Upstream, natural gas, electricity, electrolyzer materials. Downstream, refining, fertilizer, steel, AI data center power. They all sit downstream of these 12 companies. The visionaries get the headlines. The boring industrial gas company gets the cash flow. Both are true at the same time, and that's exactly why this episode mattered. I'm Big Z, follow me, see you in the next deep dive.